What is up, market milkers? Today we're going to do a recap of today's trade. We're going to call this the Market Milker Recap. The video will be in our Discord, link below. You can also check out our YouTube. It'll be posted on there as well. Instagram, Mason on Forex. You know the drill. So let's get right into it. This is just going to be a quick recap. I don't want to get too crazy. So I'm just going to keep it nice and simple for beginner traders. You always want to start off with the higher time frames. Why higher? I don't know. For beginners, higher time frame is stronger. When you're just getting into trading, this is how markets move: higher highs, higher lows, lower highs, lower lows. So with that in mind, we take a look at the higher time frame and see what we're doing. We're basically just like see over here, low. Now we start forming higher highs, lower low. You know what I'm saying? So once you get like an idea of where you think price is gonna head, and you start dropping down to the lower time frames and see like what PD arrays are left unfilled, what pools of liquidity need ran. So right here we got new week opening gap left unfilled. Yesterday, Asia sessions low never got ran before creating a new high. So this is a pool of liquidity right here. So we can likely reach down into here before moving higher. We can also annotate that we ran buy side over here yesterday. This was yesterday's move. On a Monday, we ran buy side impulsively. In literally like 10 minutes, we impulsed to buy side and ran. So we can go ahead and annotate liquidity ran on buy side. What is that on the higher time frame? Zoom out, buy side still needs ran over here, like relative equal highs. So likely this is our draw on liquidity for the higher time frame. So we know the higher time frame is bullish. So now we can just start dropping lower and waiting. So now that we have a bullish bias, this is where you want to drop lower and look for runs on sell side and changes in the state of delivery. What is this change in the state? It's a break of structure. It's pretty straightforward. So we're making lows. And this is what we want to look for. This right here. When we see this, like inside of this price action, we can also start looking for like fair value gaps over here. Or like this fair value gap, right? This would be a fair value gap on the bearish side. But when you drag it over, what's important is that price starts closing above this fair value gap. If we're still bearish, this fair value gap will hold and price will continue lower. So that is your first invalidation point when you're reading price, is what PD arrays are holding. If the most recent bearish fair value gap gets closed above and price starts chopping around it, that is likely an indication that price is no longer going any lower. But that is for a more like experienced talk. We're just going to keep it simple. Keep it simple. Okay. Higher time frame buy side. We got buy side right here from yesterday. But we can annotate that yesterday on Monday we ran buy side over here. So now we're likely going to get a little retracement. We're going to get a run on sell side before going back to buy side. So we drop lower. My replay subscription is not paid for right now, so my effing tool isn't going to work, unfortunately. So we're going to have to do this the getaway. Here, let me show you guys the getaway real quick, doggy. Come on now. TradingView thought they could stop Ace. Oh, fuck. When they thought they could stop you. When they thought they could fucking stop Ace. This is how I used to backtest. I would make the shit match my... Give me one moment. I think we're getting somewhere. Well, that's not it. This? It is. Alrighty. Bitch. Did I just delete you? Hello? Why does it disappear? I don't want the candles to be shown. I'm gonna have to keep my mouse over it. Oh, fuck you. Fool. Oh, that's some hoe shit. They fixed it. They like made it so it bugs out. Oh my. Alright. Like, dude. It's like it disappears in fucking Narnia, bro. Like... It got the same color, so it disappears. What the fuck is TradingView? Alright, we're gonna keep that middle line there so don't disappear. Maybe that might fix it. Nope. Oh my god, bro. What if I lock it? No more back testing for free. RIP. No more back testing for free. What is this world come through? Fucking subscription this, subscription that. Alright. So going into market open, we know market opens at 9:30. What are we looking at before market open? Let's just act like this session is not here yet because I can't remove it. So at about 9 o'clock is when we get on the charts and start watching price. And this is what we looked at. We have this fair value gap. The last down move or last up move before down move is likely a liquidity pool, and we have one sitting right below a fair value gap. We can also note that Asia consolidated and London ran both buy side and sell side of Asia. So since that liquidity pool is ran, we know London got ran. So now we know that buy side needs to get ran because sell side got ran. So, and then after that, once you hit your targets, you pretty much just start targeting the other buy side pools. This is where you would partial if price kept going higher, but you can see this is all we caught today. So once you form a bias, so we have a bullet. At first, we were pretty bearish. We wanted to see price just drop right here, like because we started running buy side. So this was our first. This was our first bias. Price like started to close below, and so we took a short, and then got stopped out. Like we took a short on this retracement back. Because at this point in time, it seemed like we were breaking structure and retracing and then going to continue lower and like bouncing off this it would have been a inverse fair value gap. So we took a short and got stopped out. If we were correct, you can see price eventually drops off anyways, but if we were correct, our targets would have been these pools, equal lows, relative equal lows. If you can find that on a chart near price, it's likely a target. So we got like relative equal lows right here. You can see price ran it, ran this sell side, ran London, filled in this fair value gap, and then we still have these pools right here. And you remember how I mentioned yesterday, Asia low never got ran. We just continued higher. This is Asia's low. So this is still a pool of liquidity down here. Orders that are unfilled that needs ran. So now we're just basically targeting sell side back down to the new week opening gap. And yeah. But that doesn't just mean like we're going into each session just entering short and targeting the end walk. That's not how you trade. You go into each session with knowing that like, okay, price could possibly be targeting sell side first and then buy side. So that is where you like want to expect manipulations of price and then movements in the opposite direction. Like this little thing I showed you right here, that was a manipulation and then a move lower. And then this is where I was waiting to get to. So these fair value gaps, okay? This is the important part. You don't just go marking up every single fair value gap. You only note the like important ones, like around swing points, like which ones are holding. So, for example, you have this move right here, create a high, then we create a low. If we were bearish, the last fair value gap before the down move must hold and continue lower. If we don't, boom, price starts closing bullish. And then the last up move before the down move, this is your change in the state. We get a fair value gap. This is at 9 a.m. We start to close above and hold price. This is an indication for bearish price. At 9:30, we get that impulsive move, run on buy side. And then this is where we are looking for price to hold. Started closing below it. This is why we started looking for a short. Because of this fair value gap right here. So our first initial bias was, you can see before looking at this price action, you can see why we took a short, because we ran buy side and we're starting to reject. You see the wicks, this is like showing a rejection. So we took a short inside here, we set our stop loss above this fair value gap, like 50%. You see this is where we got stopped out. Wait, where did I take the trade at? I think I took the trade like somewhere inside this fair value gap. I think that's where I took the trade. Oh, excuse me. And then I set my stop loss above this fair value gap. Boom, got stopped out. Then I analyzed price real quick. I'm like, all right, price is obviously closing above bearish PD raise. We got this close. Then a retracement. This would have been a beautiful entry right here. We missed this long. Price impulse moved out, so we went long right here. You also could have went long when price retraced back into here, setting your stop loss below the lows. What's your target? Again, the fair value gap, and then liquidity pools. So we hold, and then when we hit this price, like we were trading inside the fair value gap, you see when we hit it on the 15-second, like inside these wicks, is where I would start looking for change in the state of delivery. And I closed my trade because like I was like, all right, we tapped into here and now we're starting to like slow down, like no impulsive candles. It was also like, yeah, I closed it like literally right here on this candle. And then we started to retrace. I was kind of upset with myself because you can see we filled in more. But that's the thing about trading. You're not always going to be 100% right, and you're not always going to know the exact move. So, like, you want to pay the trader. If I sat here and held this trade, I was also moving my stop loss up. So, yes, price would have came back and probably stopped us out, break even or for a loss, even though we were already in profit. You know, even though we're sitting here looking, waiting for price to come all the way back up here, and it doesn't have to do that. So you just want a partial when price hits your targets. It's that simple. So again, higher time frame, what's the bias? You drop down lower, what PD arrays are holding, and then you target the liquidity pool in the opposing direction. You look for change in the state, and that's it. If you're interested in becoming a market milker, click the link, VIP Market Milkers. You can either join through the WAP or we have the service subscription page at the top of the Market Milkers Discord. This video will be posted on YouTube. This is Ace on Forex, and I'm out.